Welcome to Iron Vision Trading, Episode 5. We've got a special program today. I'm actually going to be able to trade live for you. I took off today from work, so I've got some time during the market hours to actually get in the platform and show you my trading. Let's go ahead and look at activity to date this week. So if we go back 7 days, that would start with our PayPal position. So we put on a short strangle for PayPal at 50.62.5. We brought in $2.21 in credit. And the next day, we were able to close that out for $58 winner, so we took it. 1 day turnaround on a pretty low price stock, so happy with that. So with Pepsi, we were sitting on 2 short puts at the 135 strike. We did get the move up we were looking for in Pepsi, quite a big run up actually, and that gave us the opportunity to take off the entire Pepsi position for $339 profit. Now we added an M&Q position, which in hindsight was a little bit early. So we already had the 28,500 put, and that position there is still open. But we had a pullback in the NASDAQ, and oh my, NASDAQ has been all over the place this week. Massive pullback over the last couple days, and then into this last week, a huge drop, and now a huge resurgence, back up, back down again, back up. Lots of movement in the NASDAQ. And so on one of those down days, I went ahead and got long again with another short put at 2,700. Now we do have 2 short puts in the NASDAQ, 27,000 and a 28,500. So last week we talked about our Intel position and how we rolled it from the August to September, adjusted the strikes, brought in some more credit. So actually we've had this pretty big pullback. Now recently, last couple of days, there's been an uptick again and sort of a stabilization, but this big pullback actually, we went ahead and rolled down our call. So we rolled from the 130 to the 110 and brought in an additional $230 in credit, $236 actually. So right now we've got the short 110 put and call. So that's actually a straddle. So we've rolled to the straddle and we're still carrying the long 170 call. There's really no need to do anything with that. If you take a look here, it's marking for 4 cents. So if we were to close that out, we would only receive $4 for that. So we might as well just leave that on. So in the event that we get a massive surge in Intel, which has happened, it actually tripled or quadrupled earlier this year, we'll just leave that on. $4 isn't worth taking off. So Procter & Gamble, we had gotten out of our last position, if you recall. And so right before earnings, we did go ahead and enter another strangle. Same strikes, actually. Procter & Gamble has really just maintained its position right around that $150 price point. And that's where it was at for earnings. We sold the 140, 160 strangle. Out in the September cycle, we brought in $3.60 for that, so $360. So after earnings, actually Procter & Gamble dropped quite a bit. So our call dried up. We took it off for 59 cents. And so we're just short the 140 put and we're leaning long. In Visa, we put on another expected move butterfly, this time to the upside. And actually after earnings, we got a move to the upside. I was tracking in about a $50 profit on this, but we held and unfortunately the stock pulled back. And so this is going to be a max loss of about just under $200. On the 28th, we put a strangle on an XLE, so this is an energy ETF. It's been kind of range bound, so we're just hoping it continues to bounce around and not get too crazy, and we'll be okay on that. Starbucks had earnings this week as well, so we sold a short put in the 23-day cycle on the 29th. We brought in just under $2.50 on that, and the next day Starbucks rallied, so we were able to take that off for 96 cents, so a quick $149 winner on Starbucks. We put on a downside expected move butterfly in Microsoft, and unfortunately, it bounced the other direction. And so this was another max loss position, so we threw away another $365 on that trade there. So with Meta, we did an iron condor for earnings. We sold a call spread above the stock price. We sold a put spread below the stock price, and we brought in about $4 for that trade. After earnings, Meta crashed by like $50-something. We were able to take off that call spread for 20 cents. So now we've got $3.85 in credits collected, and we're leaning long. We've already got a nice uptick of almost $14 today in Meta. If we get reversion back to where the stock price was at, even another $5, $10, $15, our put spread will then start to lose value as well, which is what we're looking for. And so our position overall will continue to track positively, and that's really what we're playing for, is a reversion in Meta back up a few dollars more from where it's at now. We also did a trade, an earnings trade for Chipotle. In this case, we bought a call diagonal spread, so another debit strategy. Cost us $1.39. After earnings, though, for Chipotle, a massive rally, which actually worked exactly like we needed to. And so we were able to sell that out for $2.70, so a $131 profit the next day. Now, I had mentioned the SpaceX position that I had and how I put it on thinking there wasn't going to be earnings upcoming in the near future. And then within a day or two, we got the announcement that earnings will be coming out. And so I was able to take this off as a scratch. And so I just did so, and we'll plan to maybe put another trade on right before earnings for SpaceX. Now, it brings me to a couple more butterflies that we did just for earnings again this week. Apple had a big one, and unfortunately, this is going to be another max loser. So we did an expected move butterfly to the downside, and we got the move we wanted. This is another situation like Tesla where it overshot. Significantly overshot where we needed it to go. We got the direction right, but the magnitude was more than we needed. That's one of the problems with these butterflies is not only do you need the direction, you need the magnitude correct, and really you need the time as well. And that's why generally I don't like these types of strategies. They're kind of fun. They're kind of engaging for earnings, but these are not the core of the position. And in fact, as you've seen this week, I've basically burned up $1,000 on these types of trades, which sure, in hindsight, obviously if I knew that going into it, I just wouldn't have put these trades on. But there is something to be said for engagement factor with these. However, like I said, I'm going to be tracking for the rest of the year and just look at what did these debit strategies add to the account. Are they really a significant drag on the account? And if so, then probably going to cut those out or find a better way to play earnings with these higher price stocks in the future. So Reddit, again, another expected move butterfly. We thought to the upside in this case, and Reddit tanked after earnings. So that entire thing will go to max loss. So Reddit, another $337 down the drain. And the final for the bleeding is an Amazon, again, expected move butterfly to the downside this time, and Amazon ripped higher after earnings. In that case, another max loss on our hands, another $319 down the drain. Yes, a lot of hurt for these earnings plays this week. Certainly, this would say, man, these are not worth it. All it takes is one or two to go the right direction, though, where you can, double, triple your money on one and offset some things. So I'm willing to play it out. Few more months at least, but hopefully through the end of the year, get some good data points for how overall, we've had a bad streak here, but how overall these are working in the account, but we'll certainly adjust and play that by ear. All right, so that's it for trades up until today. So now we've got some cleanup we need to do. As I mentioned last week, this Friday was going to be the 21 days to expiration mark for many of the positions in the account. As I talked in the original video, that's one of the markers that we use on our short premium trades for when it might be time to step in and adjust, because that's when the gamma risk can really start to impact at least your undefined risk positions. And I have a lot of those. So let's go through the account, take a look at these positions that need to be adjusted, starting with M&Q. Now, I already discussed the trade that was made, that 27,000 put, but that was already put on in the September cycle, so that's not a problem. We are up 26% on that right now, so part of me wants to go ahead and take that off and reduce some risk on our position overall. The fact that we put that on 4 days ago, I think I am going to do that, and we'll chalk that up, take a few $100s out of that, so I think I'm going to go ahead and close this position out. All right, so now we've taken some risk off the trade. We took about 3,000. This should adjust later, but you could see when we made that trade, we gave ourselves back about $2,000. So the buying power, you can see right here, the buying power percentage went from 80 something to about 74. Again, 75, 80 is way too high for a buying power percentage when you trade this way. It's a little misleading though, because I am holding 400 shares of SGov, so that's actually reducing my buying power, but that is basically cash that can be liquidated if I had a massive buying power expansion. So one thing I actually forgot to do is roll this position out to the next cycle. So let's do that right now. We're going to roll to the next monthly cycle. And you can see without doing anything at all, I simply am picking up the position from August, rolling it to September, and technically, what that's doing is closing down the August position, reopening a position in September, but we treat it as a whole trade package. If I do that, I don't have to do anything at all. I can leave the strikes exactly where they're at, and I can bring in $328 per point per tick credit, which you'll see here in a second is going to be $700 almost $700. You've got a times 2 multiplier for those ticks, so that's a $656 credit. We're bringing in an additional $600 on this trade. So that is reducing our break even to the downside even more. So next, let's look at Apple. Unfortunately, I'm going to have to close this out. I'm going to wait a bit because Apple's softening just a bit. If this actually can fall inside of my 307.5 strike, then I might be able to scale back a few more dollars. So we're gonna hold off, and we'll do that one. I just hope I don't forget. Amazon, there's nothing to do in Amazon because actually, as you can see here, there's no mark price. These are so far out of the money that I probably wouldn't even get filled on them. So this is just going to expire completely worthless. I don't need to do anything other than perhaps cry a little bit for throwing away $300. Chipotle, we just have the 100 shares because we already took off that vertical. I will speak to Coin. So Coin had earnings as well, and it's been a massive drop, $13 drop after earnings right here. And you can see that our short call that is in the August expiration cycle, 21 days ago, has now significantly become profitable. We're up $516 on that. And I'm very tempted to take it off right now. However, if you notice, 21 days ago, and actually this is not a problem. Normally it would be, but we have a long call that offsets that gamma risk. So we've got a long way to go, $30 from 50 to 180. If this doesn't get up to 180 in the next 21 days, we'll make this additional $200. If it does blow past 180, well, my long call will actually gain value too and offset that. So I don't really have the same type of risk profile as I normally would on a short premium trade. So this is technically a long premium trade that I'm selling short premium against. We're not going to do anything right now. This is a little different strategy. We're going to try to capture a bit more of that premium of that $230 that's left in that. And then once we're able to close that out, we will sell into the next cycle. Then we'll sell something in the September cycle and go from there. We talked about the new EEM position from last week that my wife put on. So that's that 59 put. We're already up 31% on that. Part of me would say, let's take that off early. That's quite a good percentage return in just a few days, but she's a stickler. She wants her 50%. So we're going to leave that on there. And you can see my other 67 put. The trade overall, the strangles with all the rolls is up 30%, but that put itself is down and we're leaning long on EEM. So if we get a few dollar uptick in EEM, that'll be very good for that overall position. Now I am going to take that position and we're just going to roll that out. I'm going to roll the exact same position out, pick up 83 cents in credit, and we're going to move on. All right, filled for 80 cents. So now we go to EWZ. We've got that 38 put. The stock has made a bit of a recovery for us, and so the put itself is up 50%, but our overall position still at 21%. At least we are in the green now. We're moving the right direction, but we've got a little bit of work to do. We're going to hang on. So we're going to take that position. We're going to roll it out, hopefully pick up 44 cents in credit on that one. Okay. Nothing really to do here in gold. Still short the 85 put. We've had a bit of a pullback, so we're marking down a bit for today. But we're just leaning long. Since we are at 21 days ago, we're going to go ahead and roll that out to the next cycle. So even though we are significantly in the money here, gold around 75, our put around 85, we're going to pick up $78 of additional credit that's going to offset some of our risk. Now we're up to $2 collected, $200 collected on that trade, and we're going to lean long. So with Intel, we've already talked about the straddle itself is actually out in the 49-day cycle in September. It's just our long call that's got 21 days to go. We have no risk there of assignment or anything like that, any gamma risk because it is our call that we own. We're along that call, so nothing to do there. We'll press forward. IonQ, so we are getting a little bit of an uptick today, which is helping out both of these positions. But in this case, we're just going to pick both of them up, roll them out to the next cycle, and you can see we're doing that whole thing. We're actually collecting an additional $281 in credit for doing so. And every time we do that, we're actually reducing risk on the trade. We're actually pushing our break even down further in the direction of wherever our risk was at in the first place. So this is the Ion Condor that I was talking about with Meta, and we continue to get that uptick in Meta. We're at 27% on the overall trade, so I'm not going to do anything just yet. With 3M, this is our strangle. We already talked about that. We put the strangle on in the September cycle, so we don't have any adjustments to make here. We're just looking for 3M to stay within 155 and 180. The Microsoft position is just another butterfly that's going to go out to pasture and a full max loss. Nothing to do here. Everything's out of the money, and these will disappear on Monday. Now for Netflix, we had already rolled out our 85 put to try to minimize some directional risk whenever the stock had continued to fall. We needed a little bit more extrinsic value, so we did that. So the only thing in the 21-day cycle is another long call that we own, so nothing to do here. Nike has been all over the place, so we've had a lot of choppiness back and forth with Nike. We've had some opportunities where it's gotten 30, 40% profit on that short put, and then we've had these pullbacks again that's drug us back down. So same thing, 21 days to go, time to roll it out, and we can do that and bring in 92 cents in credit, it looks like. So $92, reducing our risk on the trade even further, and so we lean long. Now, Oracle, if you notice from last week, Oracle was a significant loss in our portfolio, but look at this massive rally we've had in the last few days. That's really helped us. We are almost at a scratch on the trade altogether, the Jade Lizard. And so we just got the 125 short put in August, and it's time to roll that out as well. Now, check this out. We can roll out this same short put for $5.68 credit, $568. And we are going to do that. So we rolled that out, and now you can see we've collected over $1,000 on this trade. We are continuing to increase our credits collected, reduce our break even to the downside. So now, even though we have a 125 put, we could go all the way down to 115 if that were to close at expiration and still break even. Okay, now with Procter & Gamble, we've already talked about, we've just got the 140 put, leaning long, nothing to do here, and that's already in the September expiration cycle. Reddit is another one of the earnings wounds. So that entire trade is going to max loss at 337. Nothing to do. That will expire and disappear. And Visa, as we talked about, same situation. Nothing to do. Out of the money. That'll just disappear in a couple days. That one there, just about a $200 max loss. And XLE, we're pretty much flat. We've got the 54, 62.5 strangle with the stock at about 59.61. Nothing to do there. Last thing we do need to take care of is go ahead and take off this Apple position. And as you can see, just in the time we've been talking, it went from only marking at 20, 30 cents or 40 cents or something to $1.53 now. If we can get closed on this, we'll at least not be at max loss on this because it has come within our strike of 307.50. Now, I need to get moving. We got about 6 minutes before market closes, and these can be a little bit hard to fill sometimes. So I really probably just need to go ahead, try to get this thing off the board. All right, so we're out of Apple. So instead of taking the full $247 loss, we were actually able to sell it back for 77 cents and only lose the 170 on that trade. So pretty rough week from an earnings position. Yesterday was a massive day for P&L swings, but as I mentioned in the first video, I'm not going to focus much on that week to week because those swings can be quite dramatic. Your P&L day to day is often going to be driven by directional moves or delta. As I mentioned before, an options sensitivity to price movement, that's going to drive a lot of your day-to-day things, but our theta is really what we're driving for. This is the decay, the amount of extrinsic value that is expected to be pulled out of the cumulative portfolio here. And in our case, this is working for us. So every day that goes by, if all things were equal, we would be making over $100 in theta. Now, we don't expect to actually make that full $100. Some of the research that Tasty Trade has put together shows we should actually only expect to capture about 25% of that. That helps to account for some of the big losers that will inevitably come. But the principle remains the same. The theta is working for us. We can't control the stock prices. When we act like we know something, like with some of my earnings trades, it can be proven quite effectively and quickly that you have no idea what's actually going to happen. Even if you knew the earnings results, if you really have a strong hunch for the market, you have to be right. You have to be right in the magnitude. You have to be right in the direction. You have to be right in the time that it takes place. That's not the game I generally like to play. So for me, one thing you do know is that one day is going to go by between today and tomorrow, and then another day is going to go by. And so that's really what I'm playing for. My strategy is a bit of a slower strategy. Certainly, if it does have a directional component, then if the stock moves in that direction you need it to, you will get paid quicker. Your profits will come in quicker. But generally, I'm not reliant on the stock to accommodate me. That's the way we set up these high probability trades. Now with that, I'm looking right now, I wasn't paying close enough attention. Right there as the bell rang, I noticed that MES had gotten up to like 47, 48%. And honestly, with something that's been so volatile lately and the fact that the market is really kind of on the razor's edge of if it wants to go higher or like some really red days, if I can go ahead and get filled here, I'm going to take that off, even though we're a minute after the bell here. Remember, the futures contracts trade in extended hours. So I'm going to see if I can go ahead and get filled here. This will be our last trade for today. And we did. So we actually took $180 out of that MES trade. So that ended up being about 46%. Had some movement there right at the end, but we'll take that. Reduce some of our overall portfolio exposure. Get our buying power down a little bit more reasonable. So now we're at 72%. And I think we've covered everything there is to cover for today. So hopefully this was interesting to actually see some of the trades happen in real time on the platform. If you've made it this far, thank you so much for being here. Very much appreciate anyone who's following along. Until next time, take care.